Welcome back to AM Northwest. Now here to share how the retirement landscape may change in 2017, we welcome back from Swanson Financial, David Swanson. So David, how do you think things will change?
Has anything changed in a week?
Yeah.
Oh my goodness. So there's going to be some changes coming forward, and the first one may be you might want to look at what our tax situation is going to be. So if we're going to have a reduction of marginal tax rates, they're going to reduce the number of rates that there are. There's going to be more taxes that are going to be shared by the middle class than there has been before.
So you're saying the middle class will be paying more?
Oh, of course, absolutely.
Okay.
And alternative minimum tax looks like it's going to go away, which is a tax for the ultra wealthy on certain items, preference items. That will be going away. The bottom line is, though, to fuel everything that is proposed, is that there will have to be more tax revenue somewhere, and that has to come from somebody, and it will be from us.
Right. And so what do you think of interest rates?
Well, there's no question interest rates will be higher. They've already started to move since last week's show. Interest rates have moved almost 40% up.
Wow.
So the 10-year Treasury was hovering in that 1.7 range. Now it's about 2.2. I haven't seen it in the last hour. Maybe it's even higher. Some people are talking rates at 3%. What will that do? Well, the cost of everything will be going up. So borrowing money, financing our government debt, everything will be affected, and that money has to come from somewhere, presumably from economic growth.
What can we do?
Hang on.
Yeah.
Okay, so if you don't have a plan right now, if you haven't mapped out what this new landscape is going to look like in your retirement strategy, you better get on board. If you don't have a written plan, if you haven't figured out what steps you need to take to be on board for these changes, you had better get on it, because if interest rates rise and they keep rising and you're in the same types of bond mutual funds that you've been in that have a longer term horizon,
right,
you will be losing your principal. There's no question about that.
What do you know about Social Security and possible changes?
Well, this is very interesting. We all knew that in 2034, Social Security is pretty much going to run out of money as we know it is today. Okay, there'll be reduction in benefits under the current plan. In November of 2015, a dramatic change in Social Security occurred, which reduced benefits for most husband and wives by about $70,000. The new plan, what they say, is that there will be no reduction in benefits going forward, and that they're going to do whatever they can to bolster up Social Security. But Helen, that money has to come from somewhere. I don't know where it's going to come from, but if it doesn't, all the people that are retired, and there's 10,000 people retiring every single day, and about 40% of this United States depends on Social Security as their single source of retirement income, they're going to be in trouble.
You've gotten a lot of calls at your office this week, haven't you?
Oh, the phone's been ringing off the hook, yes.
And what are the number one thing, what is it they're asking you?
The first thing is help. I don't know what to do.
Right.
I thought I had it figured out. I was set for the next 20 years. Now it seems like we took a left turn somewhere along the line. What are we going to do? How can we be prepared for this? And it's an individual situation for each person based on what their family circumstances are, what their life, health, and assets are. So you need to speak with somebody who's competent and experienced. If you like your advisor, definitely great. If they don't know about Social Security or you don't feel they're able to help you, get on the phone and find somebody that can help you, and we'd be happy to do that.
Okay, now we have some viewer calls that we're going to ask you the question. We're going to ask you these when we come back from our break.
Okay, great.
We'll be right back. Welcome back to AM Northwest. We're back with David Swanson of Swanson Financial, who's going to answer some of your concerns about what to do about your retirement investments in the coming year. So, David, let's start with this question. It says, all my money is in the stock market. I want to retire next year, and I'm scared. What should I do?
That's a typical question that we would get on the phone. You need to sit down and decide how much risk you're willing to take going forward. There's no question that there will be a shift as interest rates rise, money moves from equity markets to bond markets. There's no question about that because it's more secure in the bond market. Although if companies continue to have growth and rise in value and their earnings per share continues to grow, those stock prices will go up also. So it will be, in no question, a bumpy ride going forward, and you better be prepared to take the proper amount of risk in your portfolio. If you're taking too much risk, please speak to someone who knows what they're doing and try
Right.
to get yourself aligned.
Because you say the older you get, the less risk you should be taking.
You have to, because
Right.
you don't have the time to go back to work to earn that money. So if you have enough resources to live comfortably in retirement, then make those resources protected and use that. If your lifestyle expectation is greater than what your resources will allow, you need to make an adjustment. You need to go back to work a little bit, part-time, or you need to reduce the things that you want to do in retirement to be in line with what safely your income can produce for you, what your assets can produce for you.
Another question, it says here, we have worked for 30 years and are retiring in 12 months. Our money is split between stock mutual funds and bond funds. How will we know if we have enough to retire? That's a good question.
It's a great question.
Yeah.
And that's another typical question. Someone from our workshop would come, or we'd see that in an email. What do is you make sure that you marshal all of your assets together and figure out what each of those things will do for you in the future. And you have that plan written down and defined. And then when an event occurs like last week, which maybe this is a once-in-a-lifetime event, many people hope so, you are prepared to make changes in your accounts because you have your assets already delineated. You know where everything is, and you know if you do these things, your income will still be at this particular place. But if you're going off your cuff or doing it by yourself, do it yourself, or you may not have a direction and you could be lost in 10 years. You could be out of money, and nobody wants to be broke in their early 70s.
It says here, we thought we had our retirement all figured out. Now what do we do?
That's it. That's a
That's
head
a big
scratcher.
question, yeah.
It is a big question. And what do you do going forward? You have to figure out how best you can make choices based on what's going on forward. And so maybe you need a little bit more liquid. Maybe you don't invest so much long term until you get a direction of what's going on. The rule is anything that goes up does come down. So if we do end up having a big move in one direction, we may see it moving in another direction. But when you're retired, you don't have the time to earn that money back. So younger, 30, 40, 50-year-old, that's a different set. We only work with people that are at retirement or in retirement. That's all of our client base. So we are much more conservative on how best to allocate assets going forward so you don't run out of income.
All right, I want to tell folks if they'd like to find out more, contact Swanson Financial. David Swanson will be there. 503-603-9900. We'll put all the information on our website at KET.com. David, thank you very much.